All right, so let's talk about why most investors fail. Hi, I'm Matthew Carr, Chief Trend Strategist at the Oxford Club. Thank you for watching this episode of Market Trends. If you're new here, be sure to hit that subscribe button and turn on notifications so you never miss out on my best trading ideas, which I share here each and every week. So let's talk about why most investors, especially day traders, fail or wash out. Really, it's very simple. They don't have a plan. And if you don't have a plan, then you're just going to do what you like willy-nilly. You buy shares of a company because your barber gave you a great tip, which, obviously I don't have that problem. Or maybe you dump a bunch of money into a penny stock promoter's recommendation. Your uncle or a friend of a friend gives you a hot tip about a company no one's ever heard of. Now, sure, sometimes this approach will work out for you, but a lot of times it won't. And eventually you'll end up frustrated and broke. I hear plenty of investors lament the market is rigged. And I will bet you 99 out of 100 of those people are investing on feelings or their gut, and they can't understand why they're having such a difficult time achieving any modicum of success. In investing, everyone is a genius until they're not. Right? So this is why having a plan, a strategy, a system is vital for anyone pursuing financial independence. Because when you have a strategy, you have an entry discipline and an exit discipline. And that means when the market craters and sells off, like we saw in January, or like we saw in September 2021, February, March, September, and October in 2020, or December in 2018, et cetera, like the list goes on. But when that happens, you're not responding irrationally. You're not giving into panic. You're exiting positions in a disciplined manner, either through trailing stops or hard stops or some technical breakdown that you identified, and you're entering new trades that meet all the criteria of your strategy. Now, I do what I do because I love building and sharing trading systems and strategy. I've built elegant and somewhat simple systems like, my very successful seasonal trading strategy. And I've built more complex systems that, move rapidly and take a lot of work. But regardless, whether it's a long-term or short-term strategy, they're all dependent on three basic pillars. And for me, I use the acronym SEE, S-E-E. It stands for setup, entry, and exit. It's easy to remember, and you can go, I see. This is exactly what I'm looking for, right? So let's go over kind of what I mean by this, right? So the first is setup. This is why you'd think about entering a trade, that you have a set of criteria that you're constantly on the lookout for, that you've back tested and know and are certain that these are going to work for you, right? That there's a high probability of success. And you're only going to act once an opportunity ticks this box, right? My one suggestion here is, the simpler, the better. And the more high quality you can make, these kind of criteria, better still. So for today, let's say, for example, I'm only interested in looking at mid-cap companies where revenue and earnings are growing 25% or more in the most recent quarter. That means these aren't garbage companies. They're strong fundamentally. And those are always companies that I really like to target. But let's also add a technical trigger where the 50-day moving average just crossed above the 200-day moving average, right? This is a golden cross. It's well-renowned and it's a very bullish indicator. So we put all of this into our screen. Huzzah, right? We get one hit, NRG Energy. I do want to add like one little point right here that when you are creating screens or for your strategy, you want fewer returns, not more, right? I'd rather focus on 1 to 5 great opportunities and then trying to have to dig through 100 or 200. So in this instance that we're looking at, our setup exists. Now we have to consider the second part of any plan, which is determining our entry. In this scenario, I'll just say that we want to see we'll say our entry criteria is we want to see 4 green candles in a row to confirm that, yes, this golden cross is true, that we are confirming this uptrend, that it's going to be a sustainable one, not a brief one, right? So we get that, and then we can enter the trade here, which I've marked like on the screen, right? That's right, that would be February 8th. The third step, and the most important, is determining our exit. The primary aspect of this is going to be your stop loss. Now, the whole idea here is that you want to make sure that you have some sort of stop loss, where it can be a trailing stop, it can be a percent, it can be some sort of technical indicator. But regardless, it's to make sure that your loss is going to maintain to be manageable. That a loss isn't going to all of a sudden be 80%, 100% or more. You want it to be there so that you're going to exit, and it's not going to do enormous damage to your portfolio. So for this system here, I'm going to set the stop at the most recent low, right? That's the little red line on the chart that I put there. And I'll go ahead and I'm going to set an initial profit target at this line of resistance that we see here at the top. That's the top part of that wedge we see. So right now we have the 3 C's, SEE, of our strategy. Our setup. Mid-cap companies with 25% earnings and revenue growth, where there was a golden cross, the 50-day moving average crossing above the 200-day moving average, very bullish indicator. We have our entry that we decided that we're only going to target these companies after 4 green candles in a row. That's verifying the momentum that this is going to be a true potential breakout. And our exit is set that if shares fall to their most recent low, our stop is triggered and we exit, as well as if our shares hit our resistance level, we'll go ahead and take profits, right? That's kind of our kind of maximum opportunity. So having a plan, having a strategy, setting all of this out before you even invest a single dollar helps you determine how much you're going to spend to enter that trade. It's going to help you understand how much you stand to lose, as well as your potential gain. We have a plan, right? That's the whole point of investing. Now, this is merely a simplified example for illustrative purposes, but the fact is, those C criteria, setup, entry, exit, have to be part of every single strategy on your way to financial independence. And that's whether you're looking to hold shares for minutes or for years. Armed with the strategy, you can act and react to the market rationally. There's no panicking, because we don't want to panic. And it means you're constantly working towards your financial goals in a disciplined way. And that's what investing is all about. Well, I'm Matthew Carr, Chief Trend Strategist at the Oxford Club. Thank you for watching this episode of Market Trends. For more information like this, be sure to go down to the description and sign up for my free e-letter. Until next time, here's to high returns.